This is Alan Bush with ADMIS. Well, the big news in the overnight trade was the report from the European Central Bank that they were likely to launch a very substantial quantitative easing program, which in fact was the case. Mario Draghi, president of the ECB, announcing that starting in March, the central bank will purchase 69 billion euros in sovereign debt per month, and that will continue on a regular monthly basis until September of 2016. So this was much bigger than most analysts had anticipated. This is approximately 1.2 trillion euros. The median guess was for about 550 billion euros. So this immediately helped stock index futures to advance, although we have seen some profit taking coming in more recently. Longer term, still feeling that stock index futures will continue to gain. It is very likely that other central banks will be adding some stimulus. We think later this year, the Bank of Japan could be the next central bank to add more QE. Over in the currencies, the euro currency very quickly falling on this larger than expected quantitative easing program. This plan pushes down short-term interest rates in the eurozone, which is bearish the euro from an interest rate differential point of view, and of course is bullish for the US dollar, which did advance to new highs for the move on this news. Longer term, we feel that the euro currency will probably continue to drift lower, but we think that the weakest currency will likely be the Japanese yen. However, I would refrain from getting too bearish in the very near term. There still is a flight to quality bid coming into the yen. Of course, we have these Greek elections on the 25th. So any strength in the Japanese yen due to any geopolitical event, I think, should be viewed as a selling opportunity in the yen. So if the yen can rally 150 points, 200 points, that would be a very good opportunity to sell yen. Longer term, still thinking higher in the dollar index. Over in the interest rate markets, there was some profit taking in the overnight trade in the bonds, with bonds as much as 1.5 points lower. However, with the ECB announcement, with a very large-scale QE program that is bullish for treasuries, especially at the long end, so that helped the bonds trade from lower on the day to higher on the day. Still thinking the main trend is higher in the treasury, especially in the long end, the 10 and the 30. So just to summarize, there's very big news on the ECB announcement. This has long-term bullish implications for stock index futures, the 30-year bonds, and the US dollar. It also is a bullish factor for gold, which we don't talk about that much, and it is a long-term negative for the euro currency. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.